Hi guys, good day and welcome to my channel once again. I am Dynamite. In the previous video I talked about how to spot divergence and how to use divergence to your advantage while trading. So right in this video I'll be talking about divergence again, but I will show you how else to factor it in while trading. So previously I talked about spotting divergence, how to spot it, and how to use it as a possible signal for reversal, like trend reversal when the trend is about to change direction. But in this video, I'm going to be showing you how you can actually use it to know when price is going to continue its trend. You know, we usually use the bigger time frames for our analysis. You get to know exactly what price is doing from the bigger time frame, right? So having seen that price is actually trending downwards, it is advisable you look out for structures for continuation. Now we are going to go back to the H1 time frame, which I'll be using for this illustration. Looking at the H4 time frame, if you had seen my previous video, I showed you how I used this zone. Okay, this is actually a divergence we spotted here. Okay, price going upward on price was actually going a different direction upwards here, while here price was coming downwards, MACD was going upward right here. So if you haven't seen this video, please do well to check the previous video. You will see this explanation. So but in this video I don't want to talk about this kind of divergence. I want to actually talk about using divergence now for trend continuation. So we can see that price has been trending downwards, okay, for a while, since September 22nd September on H1, and then we are trying to spot continuation patterns. One of the ways to use divergence is to actually use it for continuation. Now price is already trending downward, and what do you see? Right here you can see that price, the first leg and the second leg is facing upwards, while on the MACD the first leg and second leg are facing downwards. Okay, what I mean by the first leg is this. You can have one here and you have one here. You can see the direction. You see two here and you see two. You can see how it goes downwards, upwards. That's how we spotted this divergence. And so having seen this happen, you know that price is going to continue. First of all, you've seen price is coming downwards, and then you see a bearish divergence. It's as simple as that. It's giving you an information. What do you look out for? Price action. When this happened, okay, and you see that price was going down, tilting this way, this candle, okay, left a wick right here under the 200 moving average. Okay, not just the 200 moving. Remember, we use it. I said I use the 200 moving average as a dynamic support and resistance. Okay, so even without having the 200 right on your chart, you can see that this is already a zone for consideration. This is already a zone, a previous support turned resistance. Okay, if you do not know that, then you need mentorship. So that's a joke. It's a joke, but I'm serious. This is support turned resistance. So this is where we actually spotted that divergence. Okay, that was a good reason to tell you that, hey guy, this price is going to reverse and continue this trend on H1. Now this would have been a beautiful ride downwards if you had seen this. So that is it. And now this is the second example. Price going up, no, MACD tilting upwards, and of course if you see the zone where it is located, the MACD is at 80 level, which is an oversold level, and then you see that, an overbought level, and you see that it is taking place right at this support zone. Okay, don't forget this zone shaded blue, and then you see that price is tilting downwards. That is a signal that price is going to continue around there. Don't forget, even when you're trading this, you need your stop loss in place. Okay, you have to factor in all of those things. You don't just trade blindly. but this is just to help you figure out how to continue. You might not see this happen all the time because it doesn't happen all the time, but whenever you spot it happen, you're in for a beautiful ride. This is it, guys. Price trying to make a higher high upwards, but still a downtrend. Okay, it's still a downtrend until confirmed otherwise. Don't forget that we saw this on H4 telling us that price is coming down, and then this is where we saw that on H1 that was actually a price continuation signal because it gave us a divergence here. The first leg standing, the first leg on the MACD is actually higher than the second leg. Meanwhile, on the chart, the first leg is lower than the second leg. This is where the signal to sell comes in right now. So guys, if you take this trade, then how do you come out? How do you take your take profit? That will be your discretion. I cannot tell you where you're going to take your take profit, but for the purpose of this video, this lesson, I will say, having seen the movement that produced the first leg, the second leg, dividing this into half, 50% of this movement, if you know how to use the Fibonacci levels, 50% of this movement can be your take profit. You can factor in 50%, 25%, or 100% if you want to. So you can do the 25, the 50, the 75%, or 100% of that move. Okay, if you want to know where to place your take profit. And so after taking this trade, your stop loss should not be far from where you took the trade. Yeah, because you have to protect your account. Don't say Dynamite told me to take this trade and then you don't know that you're responsible for your capital. So guys, this is another example. Price trending downwards and MACD coming upwards, and you can see price got to an exhaustion zone on the MACD. This zone between 80 and 90 is an exhaustion zone, and you see price approaching that zone while price is still, you see MACD approaching that zone while price is still in a downtrend. That is a continuation signal, and then you can see that this happened in a zone 2, a previous support turning to resistance. This is how to factor divergence into trading, guys. So this is not just for forex, okay, trading the forex, but you can also factor this in to your sorry, that was for synthetic. No, when you're trading boom and crash and all of that, they are the same. I'm just trying to show you, if for those of you who are forex trading lovers and boom and crash traders, it's the same thing. You can see this price making higher highs, MACD making lower low. That is a strong signal, guys. Now looking at GU, okay, I talked about this in my previous video when I was analyzing the trade forecast. Okay, you can see that price is at a strong zone. Don't forget, divergences are strong when spotted at very major zones. Don't forget that. And you see that price got to this zone, and when price was approaching this zone, it gave us a clue that the sell trend was going to continue. Now, first of all, look at this. Look at what happened here. Guys, you can observe this movement, that while MACD was doing a higher high, okay, price was doing a lower low here on the big. Just imagine you're catching this, seeing this on a bigger time frame, and the second leg here, the second leg was higher while the second leg here was lower, and then this is already a sell trend. This is a good reason. And what is the next reason, guys? The MACD is also at exhausted level and overbought zone, seen an overbought zone around a previous support turn resistance, and then a divergence. This is a triple bomb for you to know that price is going to reverse. You don't need an angel to come tell you this, guys. This is clear. Now you see that price is trending downwards on a bigger time frame, and then on H1 price is approaching that zone and it's giving you a divergence. I don't know what should stop you from taking this trade, really. Okay, look at the previous information here. You can see that price was going, okay, price had approached this zone. Let's say you didn't know that price was going to reverse, and then you see that price got to this zone, and then there was a divergence in this market. Guys, this is good. This is why the market reversed. And I said when the market reverses, look out for retests along those zones. So if I want to use my my moving average, the 50, okay? If I want to use the 50, let me put back the 50 on my chart. You will see where price bounced off on the H1 time. You can see that the moving average helped us to know a reasonable support for the continuation of this trend. Let me take this off. Okay. So you guys, you can see that when price approached that zone, price broke out. Okay. After the divergence here, price broke out of this zone and retested. So now, this is why I like to use moving average. If you haven't watched that video, if you haven't seen that video, why I love to trade with the moving averages, please look out for it. You understand? This is a dynamic support and resistance zone, guys. And after you spot a divergence and then the MACD divides into two, telling us that the price has changed direction, then you see a retest on this zone. This would have been your entry downwards. So how do you understand it? You have to check for the video, my video on the MACD, strategy, and also how to trade the divergence. So guys, please, if you're new to my channel and you haven't subscribed yet, please, you're not doing well at all. Please subscribe, because this will really help. Whenever I upload useful content like this, you will not be left out. You'll be notified, because I'm going to keep doing this. I'm going to keep sharing useful tips with us, okay? And also to help others benefit as well, you need to share this. You need to like this video so that the YouTube algorithm will recommend this channel to a lot of people. A lot of people need help as well. They can get to see this information, and this information can be of help to them. So guys, you can also spot another divergence here on this chart. Don't forget the rules, guys. The first rule is that price has to be trending a certain direction, and for this illustration, price was actually trending downwards. And then you spot a bearish divergence. That is a continuation signal on this trade. This is a continuation signal, guys, on this trend. That was the second leg. We usually know it is a divergence from the second leg. The first leg, we don't know what is happening until we spot the second leg, guys. That's how it is. So we can keep looking for these opportunities, okay, up and down. Let me see if I can see a bullish example. This is still a bearish trend. I haven't really seen a bullish example just yet, but just in case you spot this example on a bullish trend, okay, you can factor it in as well.